To Mr. V.K. Sharma of LIC Housing Finance. He's the Director and Chief Executive. So let's get him on the show as we continue our celebrations of our third anniversary at ET Now. Mr. Sharma, good having you, and thanks so much for accommodating this interview request from all of us out here at ET Now. You know, before we talk about how business is shaping up, I just want to get a piece of news out of the way, Mr. Sharma. We've been hearing that there are some expectations of regulatory changes with regards to increase in capita requirements and provisioning requirements as well. Have you heard anything to this effect? Anything that you believe could come about by the next quarter or thereabouts?
Regarding the capital requirement, Chairman NHB has made a very clear statement that at this stage he does not intend to increase the capital requirement, capital adequacy requirement norms. So that area, I do not think that anything further is required. So far as provisioning part is concerned, again, it depends upon the economic scenario. Last year, regulator has been stringent in examining and putting provisioning norms. And then other risk management measures they have taken. So this year again, if the economic scenario remains bad, in that situation maybe the new norms may be put to safeguard.
And do you expect them to come by?
But capital requirements, no change is required.
Right. Do you expect new norms to come in over the next 3 to 6 months, sir?
No, at this stage I will not say that we have anything, I mean we have heard anything or anything is in pipeline. We are not, in the loop.
All right, talking about business, Mr. Sharma.
We presume...
Sure. What is your presumption, sir?
No, our presumption is that if anything is there, then again, in a transparent manner they talk to us. So at this stage, I will not say that anything is on the drawing board.
Fair enough, sir. Talking about business now, with interest rates expected to remain high for some time, how do you see demand for housing loans getting impacted? What is the outlook for FY13 as we close out the first quarter?
The demand of housing loan is, it will remain high in India primarily because of demography. People's aspiration is rising, higher level of credit awareness is there, and the credit access also is being provided. So the demand will remain high. This at least in the housing sector. We are, for our company, we have the outlook of 20-25% disbursement growth, and we are fairly comfortable on that line.
What was your reaction to the RBI keeping policy rates unchanged?
Yeah, we will not comment on why RBI is keeping or like that. But certainly, we were expecting that if some respite would have come, then the demand would have boosted further. It would have improved the sentiments. Just by stopping the increase in interest rate, it has created a good, feel-good factor, and it has improved the demand, particularly in the end user segment. So if the rates are reduced, it will further boost the demand.
Fair enough. How do you see prices of real estate in metros and other key cities shaping up in FY13? Will there be a price correction, or will prices largely be stable? And this is really an extension of understanding from you whether you expect demand to really pick up in lieu of prices falling.
See, according to me, we are in a very peculiar situation. Peculiar situation means that the new projects are now not coming up. Particularly in the metro areas, almost it is, very far and few new projects are coming up. The existing ready stock the prices are going higher and higher. So there is a substantial increase in the prices. Whether correction will take place, it depends upon that how long RBI keeps this high interest rate. If this goes for longer, then certainly there will be a stress and there will be correction.
Mr. Sharma, for FY13, what are the targets specifically for disbursements as well as credit growth?
Disbursement, as I said, that we have done it something, I mean, 20-25%. That we had planned for disbursement growth this year. And that we are fairly on track. I mean, looking to the demand, because metro areas demand is slightly slow, but tier 2, tier 3 cities, the demand is as robust. So far as borrowing is concerned, we had planned for 26-27,000 crore, and that is on track as of now. Certainly, it will depend that what scenario it unfolds in second half of the year. If the demand remains as good, in that case we will continue. But the liquidity is slowly becoming an issue.
And from the looks of it,
I mean, we are able to.
Yeah,
we are able to borrow less. I mean,
please go on, Mr. Sharma.
Yeah, liquidity is becoming an issue because of that. The borrowing cost is going slightly higher.
Okay. Just a final couple of questions, Mr. Sharma. With the targets that you set in mind for disbursements as well as the credit growth, do you think you will need to raise any capital, any kind of fundraising or capital raising plans in the next 6 months, or you would be okay with the current base?
So far as regulatory requirements are concerned, we are fairly, I mean, comfortable. Like our tier 1 capital is 11%, tier 2 capital is 6.5%, and it is within the much ahead, more than the prescribed norms. But certainly I would like to share with you that we had planned to have a QIP. 3 crore shares we had, preference shares we had given to LIC in the month of March, and 4.6 crore shares we wanted to do the QIP, which is in the process. Maybe in next 3 months we will be able to do it, depending upon again the market scenario.